With another video. We're going to be doing another stock market analysis. I've kind of decided to take a different approach to this stock market analysis that we're going to be doing Mondays to Fridays. I wanted to kind of approach it as, or present it as kind of like a news feed, kind of like the news presenters do it. But that's you might see slight changes to the way I do it. But anyway, without further ado, let's get straight into it. So if you're new to my channel, what we do is we check the top winners and top losers just to see if we might be able to find some stocks that have reduced significantly in price, but also maintain their value. And we seek to capitalize on those stocks by potentially investing in them. So let's get into the top winners. We're not very likely to find anything in the top winners, but we found one before, so let's just check anyway. So we're just going to quickly scroll through to see if any of them meet our criteria. The number one criteria, if you guys might know, is that the stock must have a market valuation of 1 billion or more. That's the first thing we look for, and after that we look at the other financials to see if it meets our criteria, just the basic things. So this one has a market cap of 14.83 billion, revenue of 43 billion, dividend yield 4.8, which is kind of low but not too bad. It's around the 5 area, 9.96p ratio, which is just under 10, which is perfect. Earnings per share of $2.09, let's say, which is really good. That's about 20%. Sorry, no, that's about just over 10%. Yeah, just over 10%, about 12%. Beta of 1.62, which is just about 60% more than the market average, which is okay considering the period of time that we're in this year. Let's just check the income statement. So net income, net income, total revenue. Let's just quickly check the net income. Net income after taxes is 1.78 billion. Net income in general is 1.55 billion. Income after extraordinary shares. So the net income in general is 1.55 billion, but it doesn't show the profit margin. But we can kind of determine that. So the profit margin, so the net income is 1.55 billion. Income off available to common excluding extra margin. Yeah, so the net income is 1.55 billion, and if you divide that by the revenue, sorry, let's just quickly go back into that. If you divide that by the revenue, which is 43 billion, so it's not much, but it's something. It's definitely something. So that's not too bad. Let's check the balance sheet. Sorry, let's quickly check the balance sheet. The debt to asset ratio is incredibly high, so we're gonna probably discount this stock. Expel this stock from the list. Cash flow statement suggests that the company has a net change cash of 1.3 billion in the 2019 financial year, 2021 financial year 5.7 billion, and 2020 financial year is 227 billion. So amazingly well it's doing in the cash with regards to the net change in cash flow. It's just the balance sheet that bothers me, but I mean it's doing pretty well apart from that. So let's just keep CNP assurances to the side. The main thing I want you guys to get out of this is just to see how I analyze stocks. Let's check this one. This one has, okay, that's not working. Okay, let's leave that one. So we've got one more stock left. It's called Global Battery Metals. So let's hope that has a market cap of $1 billion. No, it doesn't. All right, cool. So the only one we've managed to find with a market cap of $1 billion is CNP Assurances. The only issue it had was its debt to asset ratio was really high, but everything else met our criteria. Also, maybe the dividend yield could be a little bit higher, considering that the profit margin isn't too high. If you're trying to tell me whether a stock is good with regards to earnings is profit margin, by the way, or net income. It kind of has to pay you in dividends, which is income, passive income, or it has to grow. And the only way it can really grow, not necessarily based on what the market determines as growth or the change in the market price. With regards to real growth of the business, the only other way you can grow is if the only other way it can grow is if the debt to asset ratio is low enough and the profit margin is high enough to allow for the company to grow in pure cash, because then they can use that net income, that reserved cash, to either invest in other projects or reinvest in the business for growth. So in this case, the dividend yield isn't too high and the profit margin is pretty damn low. So I would say this is probably, if I was to rank it out of 10, I would rank this one about between 5 and 7. But it's not bad actually, considering all the other stocks we've analyzed. But anyway, without further ado, I hope you guys got some good tips out of this video. If not, or if you have, comment any ideas or suggestions in the comments, and I will definitely be reading all of those and getting some more motivation as well as some ideas for future videos. Well, thank you guys for watching, and I hope to see you in the next one.